All right, welcome. In this explainer, we're going to dig into something pretty cool. How to transform your business from just a way to make money into a seriously strategic asset for cutting down your taxes. Let's get right into it.
So let's kick things off with a really important question that changes how you should think about your business. For the savvy entrepreneur, it's not just about the money you bring in, right? It's about the money you actually get to keep. And the business structure you build is the absolute key to that whole equation.
Check out this number, 40 to 50%. That's how much high-income business owners can end up paying in taxes if they don't have a smart plan in place. I mean, that is a massive financial leak. But the good news is, it's one you can absolutely plug with the right strategies. Okay, so before we get into the really advanced stuff, we've got to build a solid foundation. Let's talk about the basic deductions. Think of these as the building blocks for any solid tax plan. Now, this right here, this is the golden rule, the ordinary and necessary rule. Think of it as the bouncer at the club for all your deductions. To get in, an expense has to be both common for your industry and necessary for your business to run. Understanding this is like step one. So with that rule in mind, here are the big four, the absolute must-know deductions for any new LLC. These are pretty much the essential costs of just getting the doors open and keeping the lights on. Let's talk about those startup costs. You get to deduct up to $5,000 in your first year, which is great. But what if you spend more? Don't worry, you don't lose that deduction. Instead, it gets spread out or amortized over 15 years. So you still get that tax benefit just over a longer period of time. All right, we've covered the basics. Now let's level up. This is where it gets really interesting because we're moving from simple costs to a much more powerful strategy, using your personal assets for your business. This is where you can start turning personal expenses into huge business write-offs. When it comes to the home office, you've basically got two paths. First, the simplified method. It's easy, no doubt, but it's super limited. Then you've got the actual expense method. Yeah, it's more work, you've got to track everything, but the potential deduction is usually way, way higher. The bottom line, a little more paperwork can mean a lot more money back in your pocket. And you know what? It's a very similar story with your vehicle. You've got two choices. The standard mileage rate is simple, just track your miles. But the actual expense method, that one is often a lot more powerful. And that's because of one key word, depreciation. That's where you get to write off the cost of the car itself over time. And this chart says it all. Look at the difference here. With standard mileage on a $30,000 car, you get a decent deduction. But look at the other bar. When you use the actual expense method and combine it with 100% bonus depreciation, you could potentially write off the entire purchase price of the car in the very first year. That is a massive difference. Okay, so we've seen how to leverage your home and your car. But what if we took that whole idea and scaled it up, way up? Now we're getting to the heart of this analysis. We're talking about combining your business with real estate investing to build a true tax reduction machine. This is the game changer, real estate professional status, or REPS. So here's the magic. Normally, losses from a rental property are passive, meaning they can only cancel out other passive income. But if you qualify for REPS, the IRS relabels those losses as active. And that's huge because it means you can use those real estate losses to wipe out the taxable income from your main business or even a W-2 job. Now, a superpower like this comes with some serious rules. The IRS isn't just handing this out. You have to put in the time. We're talking over 750 hours a year, and it has to be more than half of your total working time. This isn't a casual hobby. It's a major commitment, but the payoff can be absolutely worth it. So if REPS is the key that unlocks the door, what creates the treasure chest of losses behind it? That's where a cost segregation study comes in. It's an engineering analysis that breaks a property down into its parts, like carpet, fixtures, landscaping, and lets you depreciate those parts way faster than the building itself. This generates huge paper losses right away without you actually losing a dime of cash flow. And here's where we connect all the dots. Look at this flow.
Step 1. The cost segregation study creates those massive paper losses. Step 2. One spouse qualifies for reps. Step 3. You use that rep status to take those real estate losses and apply them directly against the other spouse's high income. And the result? A huge drop in your household's total tax bill. It's an incredibly powerful system when it all works together.
Okay, that all sounds amazing, right? But, and this is a big but, the real world is messy. Theory is one thing, execution is a whole different ballgame. These advanced strategies have hidden traps and non-obvious risks you've got to watch out for.
And here are some of those real-world headaches. You've got operational risks, like a new roof suddenly wiping out your cash reserves. Then there's financing risk. You set up these complex LLCs for asset protection, but guess what? The bank gets nervous and makes it harder to get a loan. These are the kinds of trade-offs you have to think about to avoid really costly mistakes.
And that brings us to this critical point. It's all about a shift in your mindset. You have to move from just being optimistic and hoping for the best to being truly prepared for what could go wrong. That's calculated preparedness.
So, with all that in mind, let's wrap this up by boiling everything we've talked about, the strategies, the risks, down into a clear, actionable framework for real success.
And look, this isn't just a simple to-do list. Think of this as your operational system for success. It's about doing your homework every time. It's about planning for the worst case, not just the best. It's about running every single venture like a serious professional business. These are the habits that build truly resilient companies. So, I'll leave you with this question to think about. Look at your own business, your own financial structure. What's sitting there untapped? What potential are you not using? Because the goal here isn't just to learn this stuff, it's to find those opportunities and put them into action.